Hey traders, welcome back to another Sunday setups video where we take a look at the week ahead and talk about trading setups that I'm watching. I want to invite you also to hit the thumbs up button, subscribe, and also comment down below what you're watching this week out of the gate. And let's go ahead and jump right in. All right, guys, so first I figured we'd start where we left off last week. The S&P 500 had an all-time closing high at 5,023, which is, a remarkable historical thing. NASDAQ, same thing, pushing higher. And the Dow, kind of the laggard of the three, didn't have the biggest day on Friday. But this was, of course, led by a lot of the semiconductors companies, which have just been on fire. Talking about NVIDIA, AMD, Qualcomm, etc. Anyways, those stocks are flying, and that's pulling the S&P and NASDAQ much higher. The dollar index is trading kind of lower towards the end of last week. We'll watch where that one goes, as this week we do have CPI, which we'll discuss and game plan for that in just a minute. I'll try and get you as best prepared as I can. Euro dollar trading higher, pound dollar trading higher, and gold fallen off of a cliff towards the end of the day. But noticeably, I think we are at right now a record in terms of the number of days that we've stayed above the 2,000 price of gold, right? So we've stayed above that 2,000 threshold for quite some time now, several weeks, and that's the first time in history that we've been able to do that. So gold looking kind of interesting there. Oil flew towards the end of last week, and that's an interesting market. We'll get into that in just a minute. And here's a closer look at the dollar index. You can see we still broke out of that key level, but since then we've really kind of just gone sideways. And again, I want to talk a little bit about sort of the main subject, the elephant in the room when it comes to this week, which is CPI. CPI will be very, very important to pretty much everything. But I like to start with the dollar index because I think it's the most straightforward to sort of break down. We can get into stocks and gold and individual currency pairs at another point, but CPI in terms of the US dollar, let's go through this. The Federal Reserve is talking about they're planning to cut rates this year. And if you're going to get rate cuts, what do you need to see? Now, again, they've forecasted that they're going to cut rates, but that can change, right? They're being data dependent. They've said this over and over. So what does that mean? Well, it means that data like CPI coming out needs to be cooling down. Inflation needs to be cooling down in order for them to talk about rate cuts more seriously. So this week, we are expecting to see CPI come down. And if you want to talk about how that impacts the dollar, if CPI comes down, slightly down, it's not going to do that much to the dollar because that's kind of what the market expects. However, if CPI comes in way down, right, cooler than expected, really showing meaningful inflation cool down, then you probably see a pretty big sell-off on the dollar. However, if there is in fact the opposite, where inflation is hot, which is possible, assuming that we have had a lot of strong economic data. And remember, a strong economy leads to more inflation, right? Because people are out there spending more money, they're buying things, they're taking out loans, all sorts of stuff. So the point is, we will be watching this number very close, just like everybody else. And I do want to say, we'll be live streaming the event if you'd like to join us on the channel. One great way to not miss the live stream, by the way, is hit the subscribe button and hit the notification bell next to it so that when we go live, you get a notification, you can join us for that event. Should be a good one. But where am I expecting the dollar to go this week? Well, I'm going to be data dependent myself. What I would be looking for, however, is I've been pretty dollar bullish because, again, like I mentioned, PMIs, retail sales, advanced GDP, a lot of readings have come out very strong for the U.S. economy, which could lead to a continued rally in the dollar in my personal view. We broke out of this range, and that was a big bullish signal for me, and I've been watching this one for continued bullish setups. I already have some bullish setups on that I've shared with inside of our VIP signals group. By the way, if you're not in the signals group, there is a link down below in the description. You can get all the trade alerts being shared by myself, Frank, and Ivan, the three traders at my company, A1 Trading. So check that out down below if that's something that you're interested in doing. In terms of the dollar index, like I said, I'll be watching for either, maybe a pullback this week, which could come off of the back of CPI, and in which case I'll have to reevaluate and decide if I want to take another position, that sort of thing. Or if we do get a rally, looking for breakouts above some of these key levels where we've been sort of seeing resistance. That could be a really interesting breakout play to watch for on the dollar index this week. And here's gold on the daily chart. Check this out. So gold has been really struggling to find its bearings. And I think that this week could be a place where we find it. So let's break this down. Remember that the US dollar will likely strengthen on hot CPI reads because why? That would indicate that the Fed is probably not going to rate cut and they might need to keep their interest rate higher for longer. If that's the case, that hurts the story for gold and could actually break us through this key level of support that we've been watching, 2010. Now, if you've been listening to my videos recently, I've pointed out that this one's been tough for me. We just have strong support and resistance on this chart. And without a real fundamental catalyst right now that's really clearly, pushing markets, I don't have any momentum trades to really speak of. So this week I'll be watching for breakouts one way or the other, whether that be a breakout to the downside or if we do see cooling inflation, I may pause a little bit on my dollar bullishness and actually look to get long gold on a breakout to the upside. So that's my thought process on gold going into this week. I know that's light, but really, again, we need to wait patiently for gold to make a move. The S&P 500 has been on a tear recently. In fact, actually, if we go to a monthly chart just real quick, check this out. It's been practically 4 straight months of just straight buying on the S&P 500 and the NASDAQ for that matter. And this is making me a little bit nervous, not in the sense that I think that we're going to come crashing down. Like I mentioned, all-time highs are historically, they're a bullish thing, right? When you see all-time highs in the markets, it's actually usually a good indicator that you'll see further all-time highs. However, I do think that we're due for a pullback, and I was listening to a really, many of you guys probably know him, Adam Koo. He's a very, very popular commentator in the stock market and FX world, the trading side of YouTube that I'm in, and I really enjoy his videos. Well, he was talking about the fact that, on an average year, there's usually about 3 corrective moves of 5% or greater on average in the S&P 500. I'm waiting for one of those, and I think that he's in the same camp. I listened to one of his videos, and I would actually recommend you guys check it out. But a 5% pullback actually brings us very nicely to this previous all-time high. So I'll be waiting very patiently and, kind of biting my tongue here while I wait, because it's been a little bit frustrating. You guys, if you've been watching my channel, I've been really bullish on the S&P and the NASDAQ, and I've been right in that call. The problem is I rode this for 3 out of these 4 months, and this 4th month has been killing me because, actually, in a real simplistic way, you can actually kind of see I entered at the lows here. I played this very, very well, and I know I'm patting myself on the back, but it's to cushion a little bit of my pain recently because, this move happened, and on this wick, I actually got, stopped out or trailed out of my trades that I had on the S&P, and you can see what's happened since. There's been a real strong rally to start out the year. I'm sure I'll get my opportunity, but I'm waiting patiently on the S&P, NASDAQ, and Dow for possible trades to come here soon. So when we go back to like the 4-hour chart, again, this market, it looks really, really strong, and I want to be a part of it, but I've got to wait patiently for my opportunity, and I think you'll get that at some point or another if you're patient enough. All right, and let's have a look at the COT data. This is, of course, one of my favorite indicators to look at. On the Edge Finder, we've built this page, and we're very proud of it. This allows us to look at the Commitment of Traders report, which shows us institutional money flow week to week. It's a remarkable indicator to get a pulse check or a snapshot of what institutional money is kind of doing with their money. What are they buying? What are they selling? And how can we track that? Again, the COT data is available for free online, but it comes out as a horrible, hard to read text file. It's literally a giant blob of just white background, black text on the screen. And so, what we did as a company is we said, what? That is not good enough. We need to make a tool for traders to actually see the COT data, visualize it very simply, and can get the data they want quickly. So that's what we've got here. Let's go through that together. In terms of net positioning, this is going to be more of a longer term indicator that shows us where institutional money is parked. Now, again, this could be a 3-month trade, a 6-month trade. We don't get that sort of detail with the COT reports. This is an aggregate report of all the institutional money that has to report. So we see, though, however, this is remarkable. Gold continues to be a very strong bullish positioning for them. The Dow, which is more value-based companies, really shot up, and I thought that was very interesting. We'll discuss that. Oil, the Nikkei, the pound, and the NASDAQ are some of the strongest sort of bullish assets on the longer term basis. On the flip side, you have the Australian dollar, still a very bearish, sort of net positioning here. Bonds, the Japanese yen, the S&P 500, the Swiss franc, and the CAD. These are your more bearish assets. And if you have the Edge Finder, you can just hover over each one of these and see the specific breakdowns. And then, of course, the second half of this report that we've broken into is the latest filing. This gives us the week-to-week readings, which can be very, very key to understanding for traders. Now, again, this stuff up here is arguably, in my view, better for investors. It gives you a longer-term perspective, a longer-term pulse check on the commitment of traders data. However, this section, which we have, again, broken down into all these different easy-to-read categories, this is where traders, I think, can get more value out of the Commitment of Traders report. What we can look at is any asset that you'd like. Feel free to pause the video if you want to look closer at yours. Let's say you look at gold, right? So lots of people look at gold. What we can see is that the net change week over week was up 1.94%. What that means is, check this out. We can understand this report better by looking at the change in long and change in short contracts. 9,400 long contracts and a decrease of 4,500 short contracts. That's a pretty bullish report. That means that overall, there was a big increase in long positions and they took off shorts on gold. That's really interesting to see in the Commitment of Traders data. This is not speculation. I understand a lot of traders like to try and track what smart money is doing by looking for, liquidity or candlestick patterns. But to me, I find that way overcomplicating what we could just look at from the straight up filing. Instead of guessing what they're doing, let's actually just look at what they're doing through the Commitment of Traders data. Sure, it's a little bit delayed, but it's still a valuable indicator to understand the overall positioning of institutional money. It's why we use it every single week on this channel. Okay, so gold, take a look at the dollar. They actually had a slight increase in the bullishness of the dollar as well. Very slight increase in short contracts, but overall a big jump in long contracts. So, keep in mind there was some bullishness on the dollar, bullishness on gold, perhaps a bit of and yen, by the way. It's a bit risk off, if you will. These three being bought in sync is kind of a risk-off sentiment. The euro was a big seller this week, 5%. That's quite interesting. The CAD, silver, you had US oil, the NASDAQ got sold, which, of course, for that pullback idea that I've been discussing, maybe this will finally give me that pullback. The S&P 500, very slight sell, and the Dow remained the favorite of the three. Again, with our risk-off sentiment, that would actually stay in line, considering the fact that if they buy the Dow of the three main indices, this is arguably the most defensive and more value-based index of the three. So thought that was kind of interesting. And I do want to mention, by the way, if you would like a copy of the Edge Finder, you can get some access to that down below in the description. You can see what we'll do is we'll do today only. This is going to be 45% off. If you click the link down below in the description, this is our Black Friday sale, but I've still got it loaded up. And since I just absolutely leaked it onto the video here today, and I don't have an editor working for me on Sunday, what we're going to do here is if you'd like to get access to the Edge Finder, you get 45% off if you click that link. That will be today only, no exceptions, because I got to turn that back off. Anyways, click that link down below in the description if you want that. Anyways, with that said, what we can take a look at next is the smart money indicator. I pointed this out the other day. We did gold, and let's actually take a look at the euro. So this is kind of interesting. COT, again, I showed you just a second ago, they really sold the euro, which is an interesting change in pace. The euro has been steadily accumulated, right? And now they actually seem to be selling. Institutional money seems to be a bit more bearish on that front. So really interesting to see that there. We'll continue to watch that. Again, this is the smart money indicator on the Edge Finder as well. Quick look at the top setups as well here. What we can do is we can look at sort of what the current read for the Edge Finder is. And what I'm going to do is I'm going to take out the neutral readings. We'll go just here. Okay, so here is right now your current strongest bullish and bearish readings on the Edge Finder. The Australian dollar being bearish, Aussie CAD, Aussie Kiwi, the FTSE, the Euro dollar getting a bearish read. Very interesting. That would make sense as we just saw the COT data came in bearish. Remember, the way the Edge Finder calculates everything is it looks at all the data and then it derives bullish and bearish readings in each category, summarizes it, and punches it out for you. That is why this software is so popular. It helps traders to not only look at the data that they want to see, but also to assist them in interpreting kind of what it's looking at, what it means in terms of impact on the underlying security. So also on the bullish side, we have US oil, we have the DAX, you have dollar ZAR, pound Aussie, euro Aussie, dollar CAD, and interestingly, no strong readings on the US indices. So kind of interesting there, again, with that COT selling a little bit, might be a bit of a pause in the bullishness from the edge finder on the indices, which it is called very correctly in recent months. And we just spoke a little bit about the euro dollar. I figured we could pull it up, take a look at the chart here. We can see that price actually looks overall, in my view, pretty bearish on this one. You had a big breakdown on NFP, right? And this is one of those things. I love to look at fundamentals as you know, longer term catalysts. And NFP gave us a real strong sort of summary of the jobs, but then you also just now had COT, right? So we have some really impactful stuff. These are real signals, not just, you know, price action, which is of course a valuable signal as well, but these are, you know, real world forces that are showing us, okay, COT is bearish overall on the euro this week. They really had a net short on the euro that went in, and then NFP was also very strong for jobs data. So to me, this could suggest that we could see further downside when looking at the euro US dollar. Now, I do want to say there is some cautionary tale here because we are sitting at the daily chart at a key level of support. And what I'd be looking for as a possible signal would be a break of this level. If you get a breakout on this, I think the euro dollar could move much lower than people are expecting. If momentum gets strong enough to break through the lows and we do see that euro dollar roll over, this is actually a really interesting trade setup on the daily chart. But honestly, when we're going back to that 4-hour chart, there might even be a play here on the lower time frames to trade it back down to that key level of support and perhaps even anticipate the break. So I would say overall, again, fundamental and sentiment readings are giving me more of a bearish read, as we saw from the Edge Finder's top setups, right? We see euro dollar on there as a bearish setup. That's going to give me extra confirmation when looking at these trades. And that is, of course, the entire purpose of the Edge Finder, is to help confirm some of the market data with your trading technical setup. So I like euro dollar. I'll watch it here out of the gate this week for a possible setup. In fact, that's probably, in terms of the currency side of things, my top setup going into the week. Pound USD, not quite getting a bearish read on the Edge Finder. However, price action looks interesting. You had this range bound market that finally broke out, retested, and just kind of chilling here at resistance. Hasn't quite had an explosive move, but again, I think CPI is something to anticipate, to watch out for this week, as this will of course move all of the dollar denominated currency pairs. We could also take a look at USDJPY, which had a really good run in recent days, recent weeks really. We had this kind of bearish trend, and I actually even thought that it would look like the dollar yen would continue lower. But again, economic data out of the US just started to come out real strong, and that's where I flipped my bearish perspective on the dollar into a bullish one. And I have remained bullish on the USD in recent weeks, and plan to do so until we start to see a crack in that economic data, or transparently, if we get CPI here this week that really blasts, you know, lower, and we see, oh my gosh, this inflation problem is completely going away, I think that takes the air out of the chest of the dollar bulls. So again, CPI is very key this week, and that is why we will be watching every second of it. We also get PPI, I believe, on Friday or Thursday, one of the two, but we will be watching those data points. Very, very close on the channel. Dollar yen looks bullish overall, waiting for a pullback on this one personally. Here's a look at some of my options positions, and we're looking real good on this Russell play. I want to talk a little bit about the Russell. This is a trade that I have on right now, and it's something kind of longer term that I'm actively trading, if that makes sense. Longer term, I am bullish the Russell. I think the Russell could have a catch-up trade in the second half of this year, assuming that we don't get some sort of economic, you know, collapse or something like that, which of course could happen. But for the most part, I do think that the Russell could have a nice catch-up trade this year, as small caps have been really left behind. I'll show you that here. So again, we're floating $1,800 on this trade. Let me show you what this looks like here real quick. So this is the Russell on the 4-hour chart, and we'll actually take a look at the weekly really quick. So look at this. I mentioned the stock market is hitting all-time highs. This is small caps, and small cap is smaller companies, right? So we're seeing small companies not quite get the same love, and that's been, of course, because COVID really hit these companies hard. They didn't have quite the cash reserves that big companies did, and they are more dependent on interest rates and debt, right? So they've struggled a little bit, but if interest rate cuts are coming, then it is, in my view, a good chance that we see a really strong run up at some point for the Russell. Now, I'll speak candidly, although, I've sold puts here, the reason I didn't just outright buy IWM and rather I sold puts, meaning, basically I'm making a promise to buy shares at a lower price, and in return I get compensated in the form of premium. That's a lot of words, and I know if you're not an options trader that just sounded super confusing. It's basically a bullish position, or willingness to take a bullish position if price comes down. That's why I absolutely love options for longer term sort of plays. But anyways, I think that, if we do start to see a break of kind of this longer term level of resistance here, it could be a really interesting thing to watch out for. Again, what I'd be looking for here would be key breakouts, pullbacks, and in that case, like I said, I'd like to build a position. And if we do pull back before that, if we don't break out, I will be selling puts, in these areas. So if that happens, I'll be filled into positions before what I think is a possibility that we see a strong rally in the second half of the year. So again, like I mentioned, these are my options plays. I also have XLC, XLE, XLY. These are the energy, the comm services, consumer discretionary, and tech sectors where I have sold puts. And again, all of these, this XLE one being the exception, are going well. And so we'll continue to watch out for those. If I do get filled on energy ETF, I'll show you what happened with that. XLE. So this is the energy sector. These are companies that are, in the energy world. So ExxonMobil, Chevron, things like that. And so, as this has pulled back, I'd be interested in building a small position in energy overall. And so if this, I've sold a put at, let's see, the strike price 82.5. So at 82.5, if the market keeps going down by expiration date, I will get assigned shares at 82.5. And so I'm happy to do that if need be. And if it doesn't, if the market rallies, then I'll collect about, I think, well, actually, let's see, what was the premium that I collected? So I sold 10 contracts, that's 100 shares each, so 82.5. So I'll be filled with an $82,500 position at that level, regardless of where the share price is, as long as it's below the expiration date. I know this a lot, and if you're new to options, I don't mean to confuse you. If you would like to get more interested in options or into options, if you're interested in that, there is a link down below in the description for WeBull. And also, if you're trading FX or CFDs, or you're someone in the US or non-US, there's a bunch of broker registration links down below in the description. Those are referral links, full transparency, but they each have like some cool sign up perks and bonuses that you can take advantage of wherever you are. I highly encourage you, if you're looking for a new broker, check them out, because you might find something that's really awesome to you. So yeah, whether it's Eightcap, OANDA, WeBull, all of them are linked down below, and there's some cool specific sign up links for you there to check out. So we'll continue to watch the options plays here. Of course, I share all of those inside of the Discord if that's something you're really interested in getting into. Something, of course, I do on a regular basis. I have two main strategies. You guys see me often trading momentum, but I also trade as a sort of contrarian, more mean reversion based strategy. I do sell puts and covered calls, and it's something that helps to balance out my equity curve in my performance overall, right? So when the markets are just moving straight up, right, my momentum trading strategy is killing it, while my mean reversion, where I'm selling puts and covered calls, is not going to do nearly as well. But when the market starts going like this, when I'm talking about the market, I'm talking kind of broadly speaking about the stock market, the dollar, when everything's sort of chopping away, my selling puts and calls, my options writing strategy does remarkably well. So I like to have that balance where I have two main strategies. I share all of it, all the entries, all the exits, all the details inside of our VIP room. So if you're not in there, highly recommend, if you like my style, if you like my analysis, if you like my videos, join the VIP group. It is well worth the cost, and you'll learn a lot of things in there, not just from me, but from our other two traders inside of the group, Ivan and Frank. Here's a look at oil here on the daily chart. We can see oil had a big bounce, and this was part of the reason why I kind of actually wanted to be involved in selling XLE puts, which is, of course, an energy ETF. If the underlying, if crude oil goes up, right? That is generally going to help out companies that are in the business of selling, distributing, piping, whatever, oil, right? So I do have some positions there. I think oil should be due for a bigger bounce this year. We'll see if I'm right about that. But we've had a key breakout here on the daily chart. We were in this kind of downward trend. We broke out. We had an extensive sell-off, but it was, kind of one big pullback for what seems to be a good push here. And I'll be watching oil to see if we can actually take out these highs. If that happens, I'll probably actually look to get into a bigger momentum sided trade. So again, I've been kind of mean reversion trading this. I've sold puts on the energy ETF several times, made some good money. Also traded US oil, made some good money on breakouts. But I will probably trade US oil itself as a momentum trade on a breakout of this 78 mark on USO. So should be interesting to watch that. And another market that is, of course, interesting in retrospect to this is, and one of the drivers for this, by the way, is China. If China has some rebound in their economy, and again, I speak very, very cautiously about this because this is a very risky area of the market. This is why we're talking about it at the very end of the video. By the way, if you made it this far, here's your keyword for the day. Type the word China in the comment section. If you made it this far in the video, again, I appreciate you guys watching. And if you're 25 minutes in here with me, then I hope you have a great week ahead. Thanks very much for supporting my content. And you must love this stuff as much as I do if you're making it this far. So anyways, let's talk a little about China. So China, their government has been a major hindrance to foreign investors, right? A lot of people are really sketched out about investing in China because the government is very different than what most of us Westerners are used to. It's a very strong, authoritarian government where, and now there seems to be like government components that are in all of the major companies in China, which scares investors, especially capitalist investors like myself. It does make me a little bit nervous to think that, I believe, broadly speaking, that good companies should be let go to do what they do best, right? Look at Amazon, right? Amazon didn't get to where it's at because the government intervened every step of the way and, forced them to do certain things. They changed the world because of innovative people, hardworking teams, and the excitement of making huge amounts of money, right? That should be a force for entrepreneurs, right? That's how they do what they do. They need to have that incentive. So anyways, off topic, but anyways, China has recently kind of taken their foot off the pedal there, the brake pedal there when it comes to their companies. They're looking at their stock market, and it seems like they're saying, well, hey, look, the rest of the Asian stock market, the Western stock markets of the world are thriving. They're doing incredible. We're not doing incredible, right? In fact, we're doing terrible. This stock market has gotten absolutely destroyed. These are at 2007 levels, by the way. Take a look at the monthly chart here. We are trading at the same levels as, well, you can't see it on this chart, but same levels as 2007. You can go look it up on yourself. But crazy to think that, this many years later, we're still there. But I do think that when you start looking at this, I think that there is a good risk to reward profile here. Now, I'm not saying there's no risk, because there is risk. I'm saying that the reward, in my opinion, is kind of there, because if the Chinese government has recently been like, hey, we need to get our stock market back in place. How are we going to do that? Well, they've lowered their requirements for certain banks to hold capital in their system, which has been stimulating, right? Because money gets deployed more. They also seem to be backing and helping some more of the companies there. There seems to be a huge buyback program, and the point is, lots of money is being pushed into their own Chinese stock market. And if that does sort of become a primary goal of theirs, let's get our stock market and let's get, obviously their economy as well back on track. And maybe they loosen some of their grip on everything, as well as, by the way, perhaps be more cooperative with other, with the Western world, right? Maybe they won't invade Taiwan. Maybe they won't, view themselves as such an opponent. If we get some, chillaxing, if you will, on that front, it could very well open it up again to foreign investors. Foreign investors, U.S. investors have massively fled the territory, right, in terms of participation in these companies. If that unwinds a little bit, we see a reverse effect. the Chinese stock market could rally, 100% over some time. Of course, that is a big thing, but a big, let's prove it before we kind of jump to conclusions. But my opinion is that I do think that we could see a good, strong recovery at some point here in the coming years in the Chinese stock market. And I have a very small position kind of betting on that. We'll see if that turns out well, but I do think we're starting to get oversold. I think they're looking at it and they're saying, I think we need to see that. And by the way, if this market comes back, if Chinese, stocks come back and the Chinese economy comes back, you know what also will go up? Most likely, almost certainly, oil. Why? China is the #1 consumer of Brent crude oil. And if they start coming back online and they become a strong economy once more, which they likely will at some point or another, oil is going to fly because their demand for oil becomes way more massive. So I think it's an interesting play, and I think it'll be interesting to watch. By the way, if the Chinese stock market continues to sell off, it invites a really big concern for the rest of the world's stock markets. If it keeps going down, it can tug down other areas of the world because so much is built around China. As much as the West and East kind of quarrel, we also acknowledge, both sides have acknowledged that they need to participate with each other. They need to play nice. If they don't play nice, it hurts both of them. So it should be an interesting area. That's sort of my higher risk idea for the year in 2024. And we'll see where it goes. Again, it's a very small position for me. If this video was helpful to you, do me a quick favor, hit that thumbs up button, subscribe to the channel for more. And remember, guys, check the description for free sign-up perks for brokerages. You get access to the Edge Finder for a discount. You can join our VIP group, whatever you'd like. There's also some free Telegram and Discord links. Thanks for watching.